Hey guys, it's Carter, and in today's video, we are diving in and looking at the fastest way to make $100 per day from swing trading stocks. So I hope you guys all enjoyed the video. If you guys get anything in value out of it, hit that like button, subscribe. If you have any questions, let me know down in the comments. So let's just dive right into it. So for those of you that don't know what is swing trading is when you buy a stock, you hold it for more than a day, but less than a year. Now, if you buy and sell a stock during the same trading day, that's considered a day trade. And if you hold it for more than a year, that is considered a long-term investment. It's a different strategy and tax bracket. So my average trade I found lasts for about 14 days. And with that being said, there is some things you must know before swing trading. The first thing you must know is practice. Practice is going to be the most important thing you do. Practice in education, right? There's a common saying in the swing trading community. It's the more you learn, the more you earn. And that is 100% true, right? And I think that's with almost every single industry, but especially with swing trading. A lot of people think it's very, very easy and simple. The mindset I always have is if you're looking to make a career out of any type of trading, right? Whether it's day trading or swing trading, it's not something that's going to happen overnight. You have to look at it as a career. And how long does it take a doctor to become a doctor? How long does it take an engineer to become an engineer? It takes a while. And you have to have that very, very similar mindset and working on your strategy and on that craft, right? The next thing you must know is you need a stock broker. So for me, the one that I'm going to be using is called Moomoo. It's completely free. I'll put a link to it down below. The beauty of Moomoo is it offers a whole bunch of scanning features. It offers great charts, zero commission, and they have something called paper trading, which virtually allows you to practice your trades without actually, using your hard-earned cash. You can practice buying, practice selling, working on that strategy, and all simulated, which is awesome. So you can build that craft of swing trading. Okay, how often do I trade is the next question I commonly get asked. Okay, so for me, I take probably 1 to 2 trades per week. And I understand that a lot of people think you need to swing trade every single day. That is not the case. For me, I found it's better to have high quality trades and not trade as often than risk your trades and trade every single day. That just works well for me. And I feel like, especially for beginners, you need to adopt a very, very similar mindset. Okay. When do you feel comfortable, right? And the question that I'm trying to ask is how long normally does it take to become a swing trader? On average, I found it takes a minimum of 6 months of paper trading and 6 months to a year of paper trading and practicing your craft, okay? And why do you trade? To make money, okay? That is why you trade. So the what, how, when, why, ask, all that stuff. We just covered it. So now the next thing is breaking down 2 swing trades that I just recently did. And there could be a possible another one on this one here. So this is the most recent swing trade that I took. It was on Apple. I took a trade at $137 right in this zone right here. We'll go ahead and circle it. And the reason why I took that trade is because we had this common support, right? So every time that pretty much Apple hit this 138 mark, we got natural buying pressure. So you'll notice it hit it once, hit it twice, then it curled back down, and I hit it on its upward trend. Now, my mindset going into this was hitting this resistance at 155, so virtually risking, probably about $8 to possibly make about 20, which is a great risk and reward. It's a hair over 2 to 1, but this thing kept going up and up and up and up, right? On average, I find that these are going to be the most common ones, right? I took another trade right in here at that 138 mark, and the reason why is because we have that natural buying pressure at this price zone right in here. So it curled back down, bought in, sold at that resistance right up here. It established that resistance on that first move up, right? So I sold right here and it continued to go higher. But for me, I never see an issue with just taking profits. If you're somebody that's nervous, is this thing going to crash? you should not be in the trade and take the profit and leave and just wait, right? Sometimes it's better to be on the sidelines than to be in the position. And then we immediately saw this massive amount of sell-off where Apple pretty much has gone from 158 all the way back down to these levels, which always brings a decent opportunity. So now we understand that there is this pattern that is happening. So there could be a possible trade, right, from 138, hopping in right here, setting, your stop loss at 133, because sometimes trades go south and you have to just cut your losses and move on, right? You can never, look back and wish you would have done something or something like that, right? You just need to do your strategy and let it ride. So for me, I think there could be an opportunity at 138, setting your stop loss at 133 or even below 130, and risk that $8 to possibly have this push back up, which is awesome. So these were, 2 trades that I recently did on Apple. The other trade I did was on a company called Home Depot. Very similar situation. We had a tendency to get natural buying pressure at this 262 mark. So it hit it once, hit it twice, and then it hit it down here, and that's where I took this trade. Hit it here. I understood that there was some resistance right here. But the beauty of this one is with investing, right? I didn't make as much as I could have, because on this first pullback, this is where I sold, because my mindset going into this, when I saw this curl up like this, and we saw 2 consecutive downward trends or candlesticks going down, I thought that the trend was going to continue and kind of do something like this, right? And continue to crash kind of down like that. I didn't think it would curl back up like that, but that's okay, right? That's why we take our profits and go to the sidelines. That's always the best move. Okay, now the most important question: how do you find stock? Okay, so for me, I use a company called Finvez. Finvez is completely free, does not cost anything. They do have a real-time real-time service, but for me, I just use the free version. It makes no reason to spend extra money when you don't need it. So the first thing I do is I want to understand what's going on with the stock market, right? So looking at it, you'll notice we had a great day where the Dow Jones was up, the NASDAQ was up, the S&P 500. I will even go to the S&P 500 map and see if there's any sectors that are selling off for some sort of reason. So looking at healthcare plans, you'll notice we see a little more volatility in this sector. So maybe don't take a trade during this time if we're seeing a little more volatility on these stocks here. On top of that, Tesla took a tumble down. I'd pull that up on my chart, see if it's near some sort of support line. Okay, so now that we understand that, the next thing I do is I go to groups. I want to see some of the top performance for different sectors. So energy's up, customer defense is up, in industrials, financial. So now that we know that, we understand what sectors are growing, moving, getting a lot of buying pressure, which is always very important. Next step, moving to screener. This is going to be how you guys find stocks. So for me, I go to the all tab, put the descriptive, fundamental, technical, all in one place. So the next thing, this is all personal preference. You can adjust the price if you want. If you're just starting out, some people go underneath $20 so you can capitalize on those shares. But overall, you don't have to do that because, like I said, I swing trade with Apple, with Home Depot, blue chip stocks all the time. So that's something you do not have to do. But if you're just starting out and want to get a lot more shares, that could be the move. The next thing I do is go to relative volume. Relative volume, pretty much overall, it means the relative demand for the company. I go over 0.5. The higher up you go, the more volatile these stocks are going to get, because you want volatility. You just don't want too much volatility where it's squeezing up 30-40% and then tanking down 30-40%. It's going to be very, very hard to judge. The next thing I do is I go to average volume. Average volume, we're going to go over 500,000. We want people buying, we want people talking about this stock. So you will notice we still have 1,000 stocks left to choose from. And this would take all day to go through. So the last and final thing I do is I go to this pattern here. And what we want to do is we're going to go channel up, right? Channel up is pretty much just going to put stocks in that upward trend. So we click charts, and you'll notice most of these stocks are on this upward trend. But the issue with it is they're all near some sort of resistance, right? I understand they're making moves, making money, but anytime a stock is up that high, for me, high risk, high reward. I'm not going to take a swing trade on this, or even on this one. If we go ahead and we look at it, very similar situation. We have that resistance at 550. I would rather see this thing at 439, right near that support. So the next thing, we adjust the pattern, go channel up. So instead of channel up strong, go channel up and see if that brings a little more opportunity. So what we're looking for a stock on an upward trend that has gotten sell off to some sort of support line. And it may take time to find a stock, but something like COMM, you'll notice, has that support right here at $9. Pretty much $9 even. There could be a move here. So the next step, I will pull it up on my chart and we will analyze it with a little better tools. So COMM, and what we're going to do is we're going to zoom out. So you'll notice, right, looking at this, what do we see? What's the first things we see? For me, I see heavy support at that $9. First thing, we're going to go ahead and draw that out. Boom, $9, hit it once, hit it twice, got natural buying pressure. Second thing, looking at the RSI, which is the relative strength index, determines the overall, pretty much the strength of the stock. Anytime it's pretty much on this one, below a 30 or below really a 45, we get some sort of buying pressure, right? You'll notice that dip down in here, went to 42, we immediately caught fire. Right here, it dipped down, and then we got buying pressure. The next thing is I like to kind of see what's going on with this. So they did release some sort of quarterly report. They probably missed, it does look like they missed a little bit of some, possibly some earnings or something like that, which caused the stock to sell off. So understand there could be a little more volatility, but there could be a move from $9 to possibly the next dip up would here be at 11. So risking, possibly you could risk all the way to this one at 865. So risk, let's just say $1 to possibly make 2 or 3, which is a good risk and reward. So this is what I do. I constantly go through, analyze stock. That's going to be the game. That's going to separate winners from losers with swing trading. You could have the best strategy, the best mindset, but if you're not picking the right stock, you'll lose money 100% of the time. And that's just the truth of it. So going through this, it may seem confusing, overwhelming, but it's something all swing traders will have to do, especially if you don't want to pay for like trade ideas or some sort of software scanner, which I do have, but I honestly use Finvez a lot more just because it's so much easier, and I can customize it a lot easier. And you can just go through and continue to mess with these. So channel up's a good one, horizontal support and resistance is a good one. And you're just looking for stocks that are on that upward trend that have gotten some sell-off. So for me, I think COMM would be the move as of right now. But understand higher risk, higher reward just due to the possible missed earnings. So guys, that is it. Hope you guys all enjoyed the video. If you did, hit that like button, subscribe. If you have any questions, let me know down in the comments, and we'll see you guys later. Take care.